Why do you think more value could be potentially realized if Alphabet were to be broken up?
So I think just as your prior panel you were just airing said, the bigger these companies are, the bigger the fines get. The EU fines Google $5 billion a year sort of because they can. These companies were broken up. These government agencies would not feel they had the right to fine these companies billions of dollars. Secondly, again, building on the prior panel you just aired, like the woman that runs YouTube doesn't want to be a CEO, and the man that runs AWS over at Amazon doesn't want to be a CEO. And the reason is people like me yell at them when they don't have returns on capital, and investors mark their stock down, which makes their employees leave. We'd much rather have that kind of accountability for smaller pieces of Google rather than this conglomeration where everyone hides behind the search engine's wonderful 90% profit margins for their funding when they lose money and they don't perform as business CEOs should perform.
Terry, we had those comments from the Justice Department's antitrust chief, Macon Delrahim, yesterday. He basically laid out some of the possible arguments for why investigations and antitrust scrutiny for some of these big tech companies could actually make sense. Do you think it materializes?
Well, I think what happens at root is nothing for a very long time. Market time and political time are very different times. And you're right at the beginning of a Google probe at the Department of Justice that I don't expect really gets into gear until after the 2020 presidential election. It will take quite a while to do that. And Congress is not going to push a probe. I think probably 3/4 of the Congress is not inclined to go break up any of the large companies. What they want are regulatory solutions, which probably include fines. The only thing that's going to come about in the short term, the medium term, really is the FTC Facebook revision of its consent decree, and that's been on the cards for a year now anyway, and pretty much everybody knows about that. So I don't think you're going to see government pressure on this in the short term, fundamentally.
Terry, just to play flip side to that, I understand why you don't expect to see government pressure in the short term. But if you do see any other kinds of malfeasance, misinformation, breaches around data, privacy, et cetera, coming into that 2020 election, doesn't that in turn increase the risk that the scrutiny intensifies longer term?
Oh, sure, to some extent. Yeah, I don't mean to suggest that happy days are here again for the tech companies, but put it in context. It's been a generation since the tech industry has had any real serious Washington scrutiny, and they're going to get some. But I think that's from a Washington perspective overall, that's going to be a small incremental negative compared to the bigger negatives that are going to come out from continued U.S.-China trade tensions and probably a long government shutdown this fall. But yeah, you are going to get a little bit of spark here and there, whether it be Google or some other company.
Laura, as work like yours, highlighting the sum of the parts value of an Alphabet and others talking about Facebook in a similar vein, saying, look, if you broke it up, it'd just be worth more to investors. For other companies, that would prompt an activist campaign or some institutional investors saying, OK, just break it up voluntarily if it's going to be such a boon. Now, one, you have founders in control of these companies with dual share class, so that's probably not practical. But do you think they have to sort of make two counter arguments at the same time, these companies? One, we work better together, and two, together we don't have magical scale that makes us anti-competitive.
Well, I think the piece that the prior panel was missing and that we need to add here is the consumer. The consumer is deciding to use Google because its AI data engines are better when you enter a search. So you can go ahead and break it up. You can, especially Alphabet has a lot of hobbies that have nothing to do with search. But at the end of the day, no matter how small search is, even if it's a single piece, and we think it's about $600 today out of $1,000 per share Alphabet value, I bet everybody keeps using that search engine. It's just that it's not connected to YouTube, or it's not connected to Waymo, and it's not connected to cloud. So we think the overall pieces would be worth a lot more together. But at the end of the day, don't forget that the consumer is paying nothing, and he's getting better data out of the Google search engine because it has more searches. So that's you can't really break up that piece of the company, and that really is the source of its monopoly.
And
that's true of Facebook
less?
too.
Is core Google worth less if Google can't privilege its own search results over third parties?
poor Google worth less if it can't?
If it can't put movie listings from Google ahead of Yelp or Fandango?
You know, I'm going to say no. I'm going to say that I think at the margin, you know, those things probably generate little pennies, but you know, if you break up this thing, it's going to be worth 50% more. And Google, by the way, Google's clever boys. If they had a pure play search engine, they'll just figure out a way to replace that money with pricing to everyone else. So no, I don't think it's worth less.